Good morning, everyone. You are watching a live daily market outlook for Tuesday, 12th of June 2012. As expected, the initial optimism triggered by Spanish bailout was short-lived at this point, as most of the instruments erased their initial gains, with the single currency dipping as low as 124.50, just ahead of the beginning of the latest move from last Friday at 124.34. Filling the gap of over 100 points seen on last night's, previous night's, Monday's actually opening, and keeping so far the negative tone. I would say the top loser from yesterday was the crude oil, as its initial short-term corrective action has ended, with the gains being capped at 87 level, and the overnight's dip below the previous low at 81.19 keeps focus at the downside and the fears of further extension due to the increasing fears of the further expansion of the crisis in the Eurozone, as well as slowing world economies, increases the risk of further weakness in the oil market, actually the lowering demand for the energies that keeps investors highly cautious and mostly into the short positions, with some brief profit-taking scenes just as corrective action. As U.S. exempts India but not China from Iran sanctions, the another a question about the further oil prices comes as on Thursday there is a OPEC meeting, and also comments from OPEC's president, also Iraqi oil minister, that a good and suitable price for OPEC would be around $100 to $120 per barrel. Now makes the big question mark, as heavy pressure remains on the oil price, and the price is heading lower from its top at 106.40 seen just a couple of months ago, end of February, and still negative tone and quite negative sentiment in the market doesn't cope with the current situation. As said, the United States extended the exemptions from its tough sanctions on Iran, oil to 7 more economies yesterday, leaving China the last remaining major importer exposed to possible penalties at the end of the month. In the latest sign, Washington is working with other countries to pressure Iran's nuclear program, with India, South Korea, Turkey, and the 4 more economies will be receiving waivers from financial sanctions in return for significantly cutting purchases of Iranian oil. This is again the thing that keeps actually that should be pushing the price higher, as recent talks between Iran's government and the UN nuclear watchdog resulted in finding no solution for now, with another round of discussion seen in the short term. However, the pressure on oil remains quite high, and unless we see some major moves above at minimum 92 levels, personally I don't see any significant movements. Of course, from the other side, it's I would say quite a political question, as if we remember action in 2008 when the oil prices skyrocketed from levels of $30–40 per barrel to close to $150 per barrel in just a couple of months, and as immediate reaction, subsequent sharp reversal brought the prices basically to the same levels where it started within 1 year. So everything is possible at this point, but so far, as I said, quite heavy pressure due to the current market conditions is seen on the oil prices. The Eurozone is discussing the capital controls in case of Greece leaving the Eurozone bloc. The finance officials discussed limiting the size of withdrawals from the ATM machines, imposing border checks, and introducing Eurozone capital controls as a worst-case scenario should Athens decide to leave the euro. The EU officials said the ideas are part of a range of contingency plans. They emphasized that the discussions were merely about being prepared for any eventuality rather than planning for something they expect to happen, and no one has spoken basically to expect Greece to leave the single currency area, as the Greek elections are coming in next Sunday. The tensions and fears are increasing, as this will be actually day D for the Eurozone, when we'll have more clear picture whether Greece is leaving the bloc or will remain as a member of the bloc with the austerity plan already agreed, required to be accepted again by Greece in order to secure further financial aid that is so necessary for Greece, as the country will run out of money in the middle of July in case of another option that already won in the previous elections and is strongly opposing the austerity plan will win. In this case, we'll have much more complicated scenario, and most likely Greece will be leaving the Eurozone with bigger problems again, opening with Spain, Italy, Portugal. That will be quite bad for the Eurozone. Quick look at today's calendar before we move to the technical part. That is basically the most interesting thing. Not much seen today. French final non-farm payrolls for first quarter came at 0.10% as expected. From UK, 8:30 GMT manufacturing and industrial production releases. Some more positive forecasts are seen for the April releases of manufacturing production at 0.10% compared to minus 0.3% of month of March, with the IP for April is expected at 0.2% compared again to minus 0.3% of March. US import prices for May are expected to decrease. For today's forecast is minus 1.1% compared to April's release at 0.1%, and the U.S. economic optimism, the U.S. economic optimism for May is at 1400 GMT, and it's expected slightly to go higher to 49 compared to 48.5. And federal budget balance from U.S. due at late afternoon is expected to further decrease minus 101.7 billion US dollars compared to minus 59.1 billion US dollars. As mentioned, this crude oil was seen as a top negative performer in this case of yesterday's day. We're going to start with the oil's outlook and see the recent movements. The corrective action of 81.19, 4th of June low, was basically short-lived, as it was capped at 87, just below the initial Fibonacci at 23.6 at 87.14, and being also limited by descending 55 days exponential moving average. Despite yesterday's gap higher opening, the price action was unable on renewed attempt at 87. That was rejected on last Thursday, unable to reach this level. 86.61 was the highest seen, ahead of a sharp decline. Yesterday, mainly due to the comments from OPEC and the further fears of a further slowdown of the world economies that will be the resulting in the lower demand for the energies, turn the negative sentiment back to play, with investors cashing their short-term longs on the corrective action and pushing the price below 82.00 as a higher low of last Friday, and finally 81.19 last week's low posted on 4th of June, with the marginal fresh low seen at 81.10 so far. A brief corrective action was seen from the overnight's low at 81.10. However, still initial barrier broken bull trend line of 81.19 low through 82.00, currently standing at 82.27, is still limiting the corrective action, with the 82.45 descending 20 days exponential moving average seen as the next barrier. As the studies are still in the negative territory, but started pointing higher, with RSI already emerging out of the negative territory. Some corrective action, further corrective action is not ruled out at this point. Next barriers are seen at 83.00 as pardon, at 83.00 as around figure resistance, and yesterday's intraday high at 83.75, and before this we have 83.43, the 55 days exponential moving average. In order to ease the current bear pressure, the last week's closing levels at 84.60 zone need to be regained, with the key barrier seen still at 87 zone that marks the short-term range top, and they basically break above this level. That also marks approximately 50% retracement of the latest down leg from 92.16 down to now fresh low at 81.10. Would be trigger for some stronger corrective action. However, a negative tone that dominates in the short to medium term outlook for the crude oil, especially in light of the latest strong descent of 106.41, the 1st of May low that has registered the sharp losses down to 81.10. It keeps the focus at the downside. Negative, extremely negative studies on the daily chart and quite extended conditions, yet showing no any firm signal of any stronger corrective action, with the 80.00 level as the next significant support seen, next target actually seen in the short term. The weekly 200 days moving average at 81.09 has so far held the downside, but as the outlook remains quite negative and keeps the focus lower, likely scenario would be regain retest of 80.00 and the more significant supports of August and October 2011 at 87, pardon, at 75.70 and 74.94 to avert immediate downside risk. As said, a regain of immediate strong barrier at 87.00 is required, while firm break above 92, I would say at this point it's around 50%, between 38 and 50% retracement, and the 92.70 lower top of higher low, low of 16th of December 2011 would be a good signal for some stronger recovery. Key barriers are seen at 96.70-80 zone, where it's a 61.8% retracement, as well as 200 days moving average, with the attempt of creating golden death cross at this point as descending 55 days moving average that already crossed below 90 days. One is looking to cross below 200 days, one that will give another negative signal for the oil's price action. As said, euro has nearly fully erased its recent gains of last Friday's higher low at 124.34, with the strong gap higher opening resulting in the fresh high at 126.67, and that was all seen from the optimism from Spanish bailout action decided on Saturday. As the euro, as expected, and most of the comments we mentioned it yesterday in our session, that not much to be expected, and the optimism actually has been erased quickly as the pair dipped. First of all, filling the gap has triggered a further extension lower, 124.49 seen so far, ahead of 124.34 and the more significant 124.00 support. That also marks the 61.8% retracement of the short-term corrective action from 122.87 to 126.67, and basically main risk is seen now on loss of these levels, 124.34 and 124.00. That will be likely signaling the end of the short-term corrective action and the return, bring bears back in play for possible test of 122.87 low of 1st of June, and that will be basically again a signal of continuation of the downtrend from the latest lower top at 132.82, first of May low that might be bringing in focus next significant levels 121.50 and 120.00 on the upside, as the price bounces this morning from its 124.49 low seen overnight, with regain of hourly 20 days moving average and barrier at 125.00, seeing potential for a possible stronger correction. Not much to be expected at this point, as studies are still quite negative on the 1 hour and losing their midlines on the 4-hour chart. I would say a break above 26.00 level would be easing the current bear pressure and opening way for the retest of the recent peak at yesterday's peak, actually at 126.67. Any failure under 126 would be still a signal of further ranging and more or less sideways movements, as the upside is now seen limited at 126.67 and significant supports at 124.34.00, keeping the price moving within this range, and a break of either side is to define the further direction, but said the negative tone that still dominates despite some positive tone now developing on the daily chart. Still early to say that stronger correction is coming out, as long as 126.67 caps the upside, and the next very significant barriers coming at around 127.80, 128 zone, where we have the 50% retracement, upper daily Bollinger Band, and 128.23 high of 21st of May 2012. The British pound against dollar has weakened, as the upside was capped at 156 zone, and renewed attempt yesterday stalled at on approach to this level at 155.81, with subsequent easing, finding so far ground at 154.60 zone and above the more important bull trend line of 152.67 low 1st of June through 153.20 and 154.00 lows, and this keeps actually holding above this line, keeps the overall short-term structure still, bullish structure still in play. However, we need to see the break above 156.00 in order to signal the resumption of the short-term recovery attempt from 152.67. Risk will be seen on the break below trend line at currently at 154.46, and more significant 154 zone, higher low of 8th of June, also 61.8% retracement of the short-term corrective action. That will bring risk towards the downside for possible test of 153.20, very significant and strong support, low of 5th of June 2012, as well as long-term bull trend line of 135.00 2009 low. On the upside, as current this morning's action is seeing attempt higher through 20 and 55 days exponential moving averages, and regaining initial barrier at 155.00. Minimum regain of 155.80 is required at this point to turn to open way for test of 156.00. That will be a trigger for further corrective action towards 154. Pardon, 1.5640. I do apologize, and more significant 200 days moving average that is currently at 157.56. Negative structure on the daily studies, with some movements towards the upside. The study started to point higher, and RSI emerging from its oversold zone could be a good signal for stronger corrective action, with the regain, of course, of 156.00 required to confirm. Dollar yen is also holding its short-term positive tone of recent low at 77.65 as a good part of the recent losses have been regained. 79.78 seen so far, just ahead of 80.13, our initial target, with subsequent consolidation within 79.10 and 79.80 range, and the bull trend line of 77.65 so far holding the downside, keeps the focus still at the upside for a more significant corrective action of the broader downtrend from 84.17 yearly high that so far dipped to 77.65. As 55 days exponential moving average so far holds the downside, and fresh strength underway. Focus is now at 79.80 and 80.00, 80.13, our next targets, break of which to open way towards next strong barriers at 80.60. First of all, it's 80.41, the 55 days moving average, and 80.60 double top of second and 5th of, pardon, 16th of May 2012, between 38 and 50% retracement of 84.17 to 77.65 down move. As long as 79.00 is a strong support, as well as 78.68 200 days moving average hold, the downside hopes remain for further corrective action with levels as mentioned, 80.00, 80.13, the peak of 22nd of May, as well as 38.2% retracement, and then comes 80.34, 55 days moving average, and 80.60 as the next significant barrier. Swiss recovered most of its recent losses of last Friday's high at 96.56. That dipped as low as 94.77, including the gap lower opening last night, but failure to regain the previous high at 96.56. At rejection at 96.44 has seen reversal that accelerated at the beginning of European session this morning. A negative tone in the short-term outlook continues to dominate, with the risk seen on 896.44 overnight's high staying intact. We need to see the break above this level and 96.56 in order to confirm the bottom at 94.77, and 10 focus higher with the next barrier at 96.75 ahead of our key barrier at the upside at 97.69, peak of 1st of June 2012, as a strong uptrend of higher low at 90.41, 1st of May low still remains intact. However, the cracking the uptrend by break first support bull trend line at 96.00, an extension to so far to below 61.8% retracement of the latest upleg from 93.66 to 97.69 keeps the downside still vulnerable. In failure to see the regain of 96.44 and 96.56 might be still risky for further extension lower. However, so far the positive tone established on the hourly chart, it's still holding it in its positive territory, but studies started to point lower. The risk would be seen on further easing lower. I would say on the downside, if we lose the supports at just a second. Currently the pair tests 95.88, a loss of 96.00, tests 95.88, 55 days moving average, just ahead of 95.80, 38.2% retracement. At this point, loss of 95.50 zone, 95.50.40, a higher low of yesterday, and 61.8% retracement would be risky for further easing and possible extension down to 95.00 and then 94.77. Any higher low and reversal at above 95.50, 95.40 would be still keeping the bulls in play for possible fresh attack higher, and the retest of 96.44 and then 96.56 levels to be cleared in order to confirm the bottom at 94.77 and allow for a fresh strength. Break above 96 and 96.75, as said, is to refocus 97 and then 97.69. That was all for today, Tuesday, 12th of June 2012. Thanks for being with us. The recorded version of this session will be shortly uploaded in the YouTube. Our page is called Windsor Brokers Forex. Along with this, you can find a number of technical analysis for major currencies and commodities. We're back tomorrow morning at the same time at 7:00 GMT. Until then, wish you a nice day and profitable and successful trading. Good luck.